Hi, this is Walter Monteiro, and you're listening to this week's edition of the Real Estate and Mortgage Show. Hi everybody, it's Walter Monteiro from Coldwell Banker Maximum Results, and this week on Interview with the Experts, our special guest is me. Anyway, don't have a guest this week, but being that it is RSP season, I wanted to talk to you about what is an eligible investment within your RSP portfolio that a lot of people don't know about, and that's investing in private mortgages. Private mortgages are obviously something that a lot of people don't even consider, let alone know that there's an option. But basically what it is in a nutshell is rather than investing in a mutual fund or a stock, you can invest your RSP money within a mortgage. So the way you do that, obviously, is there is a sort of a series of events that have to go down. I actually wrote a book on the topic last year. It's called the RSP Mortgage Investor, and I sell it online at rspmortgageinvestor.com. Had quite a few people buy it and some really good testimonials. But basically what's interesting about it is when I talk to people about using their RSPs to invest in mortgages, most people don't even know that it's an option. Well, it is an option, and it's something that I want you, my listeners, to be aware of. So when you invest in a private mortgage, you're basically lending your RSP money to homeowners or would-be homeowners. Now, these people borrow the money obviously at a little bit higher rate than what they're going to be borrowing from the bank from. And the reason that they're borrowing from you as opposed to from the bank is they don't necessarily fit within the box in terms of what a lender or what a bank looks for in terms of a viable customer. So that's why we look at the the private money or the private mortgage market a little bit differently. We use a term in the industry called loan to value or LTV. So in other words, that basically means that we are only willing to risk a certain amount of money on a certain value. So just as an example, if if I had a property worth $100,000, now I know you can't find a property worth $100,000 anymore, but just for the example, if you had a property worth $100,000 and your comfortable LTV, loan to value ratio, was say 75%, then you wouldn't ever expose any more than $75,000 of risk on this property. And the reason you wouldn't do that is because if something goes wrong with the loan and the property has to be sold to recover your money, there's enough of a buffer in order to be able to pull your money back out. But if you follow some guidelines that I'm going to talk to you about, then you shouldn't really have to worry about going down that road. But you should always have a plan B just in case you do. As far as investing in mortgages is concerned, you have to have your RSP as a self-directed RSP, and it has to be held by a trustee that allows you to invest in mortgages, because not all of them do. Originally, when I discovered this investment strategy back in 1996, I was a Nesbitt Burns client. I was very happy with Nesbitt Burns. No problems, no complaints other than the fact that my money didn't really do much. It didn't seem to be doing anything but shrinking in value. But hey, so was everybody else's. But at that time I was young enough to not really have any big concern about it, but at the same time I didn't like the way the portfolio was going down. So that's what sort of had me looking into private mortgages, because I just thought it was first of all a lot more lucrative than putting it into a mutual fund. I was selling homes. I'm still selling homes. And sometimes people that needed private financing were paying, rates of anywhere from 12 to 16% for second mortgages. And I always thought, geez, that's so lucrative. I wish I could get in that market. If only I had a few bucks to invest in the mortgage market. And it ends up that I did. I was fortunate enough to be exposed to a mortgage broker at the time that was very good at this strategy. She showed me a little bit about it. and the rest is history. My account has grown substantially since then. In fact, I was looking at my old goals sheet the other day, and I noticed that I had a certain affirmation in terms of how much money I wanted in my RSP. And it was funny because when I looked at that number the other day, I far surpassed that. And fortunately, it's been because of being able to invest in RSP mortgages. Okay, and anyway, just to give you a little bit of an overview on that, you do have to be self-directed, as I had mentioned. So in other words, you have to be with a with a trustee that allows you to invest in mortgages as well. So a self-directed trustee that allows you to invest in mortgages. The one I'm with is TD Waterhouse. They've been pretty good. And there's a few others. There's Canadian Western Trust, there's Olympia Trust, and a few others. That's just to name a few. But that's where you have to have your account set up in order to be able to invest in secondary mortgages. Now, some people are probably wondering, wow, do I really want to be exposed to that kind of risk in terms of second mortgages? Well, there's no question about it. There is, I don't want to, sugarcoat it. There is a certain element of risk in investing in second mortgages. Absolutely. But if you play your cards right and you follow a few guidelines, you should be able to invest in second mortgages relatively unscathed. In fact, I've never personally had a mortgage go bad myself. I've had some come pretty close, but I've never had any go bad, and I've always been able to get all the money back that I invested, plus obviously the return that I looked for. So, if you follow some very underwriting guidelines, then you should be fine. Okay, and typically what I do is when I first look at a mortgage investment opportunity, I first of all assess the property more than anything else. So if they're coming to me with a property to finance, 9 times out of 10, it's usually a refinance. So in other words, this is somebody who already owns the property and they're looking to refinance for whatever reason, either to pull some money out or they've come into a situation where the current mortgage on their property now isn't going to renew, or maybe they're doing some debt consolidation, that sort of thing. But what I look for, as I had mentioned, is a certain loan to value that I don't like to go over. My personal rule of thumb is somewhere between 80 and 85% of the total value of the property. So that's rule number one for me, and that's in my marketplace, of course, in the Cambridge, Kitchener, Waterloo market. Okay. The next thing I look at is, of course, a factor that's called the TDS ratio. TDS ratio basically stands for the total debt service. That ratio is basically a measurement of how much of the borrower's money is going towards servicing of all of their debts. Okay, so in other words, if they make $10,000 a month, I don't want to see any more than $5,000 go towards servicing all of their debts. So I use that factor as well in terms of whether I should lend to a particular borrower or not. And then there's a couple of other things as well. I always look at, their credit worthiness. Obviously, if they're coming to me, the credit worthiness is always a little bit bruised. But I don't want, a chronic. I don't want somebody that just can't afford to pay their bills altogether. I want to know why, they're going through what they went through. And everybody's got a story. And if it makes sense to me that, maybe they just hit a little bump in the road, then I'm willing to obviously take a risk. Of course, an educated risk, but nonetheless a risk in terms of lending these people money. All right. And so if I'm very comfortable with the whole process, then after I have reviewed everything, I order an appraisal on the property, even though I'm very familiar with the marketplace. But, just to have sort of a caveat or a safeguard, I order an appraiser from a licensed appraiser, and they give me a value on the property. And somewhere between what I think it's worth and what they think is worth is what I lend the money on. And then once I decide that I want to go ahead with this loan, I simply execute all the documents that need to be executed. I prepare a mortgage commitment, prepare all the documentation that's required from my trustee, and send off all that documentation back to them, which they in turn obviously forward off to the lawyer that's going to handle the transaction, and the money is sent to them, and in turn it's sent to the end borrower. The nice thing about investing in mortgages is I never have to, in your RSP primarily, is I never have to worry about making any kind of collection payments. We get a pre-authorized checking from the borrower, and we collect the payment on a regular monthly basis, and it works out terrific. So it's a great opportunity, and I encourage people to find out more about it. I do sell an information program online about it. It's called the RSP Mortgage Investor. It's rspmortgageinvestor.com, and you can get all the information there. Right now, up until the end of February, I'm offering a discount on the program. I've got two elements to the program. Number one is an ebook that for those of you that like to read, you can just go right into it, download the book, and start reading. You can virtually read it within a couple of hours and know everything you need to know to invest in mortgages. And that book, I normally sell it for $47. For this month, I'm selling it for $17. And there is a code on there a discount code that you have to punch in. It's 2012. So obviously, being the year 2012, you just enter that code in. If you are more of a visual person and want to see an actual PowerPoint presentation on it, I sell a video presentation on it as well, or a video tutorial on it as well. You still get a copy of the ebook, plus you get the video tutorial. I normally sell that for $147, and for this month I'm selling it for $47. So you just have to enter in the discount code 20128. So 2012 8. Okay, so for those of you that are interested, or maybe even just want to talk to me about the investment strategy, by all means, I invite you to give me a call. You can reach me at 519-624-9222. Thanks again, and I hope you're enjoying these lessons, and I hope you have a great weekend.